Hi all and welcome to another edition of the week ahead. We have a busy week ahead of us which will mainly be driven by UK CPI, retail sales and unemployment data. From the Eurozone we will also receive Consumer Price Index and also notes on EU Brexit Summit. From the US we will receive retail sales and also Federal Reserve minutes, and towards the end of the week Chinese GDP data release. On Monday at 1:30 p.m, US retail sales are due for release. Expectations are for 0.5% figure from previously published 0.1 month-on-month for September. This data could increase volatility in US equity indices and also US dollar currency crosses. Moving on Tuesday at 9:30 a.m, UK average hourly earnings are scheduled for release. Market expectations are for earnings excluding bonuses to show 2.8% from previously published 2.9%. This data could impact volatility across UK equities and also sterling currency crosses. Now, moving on Wednesday at 9:30 a.m, UK CPI data is due. Current market forecast is pointing to 1.8% figure from previously published 2.1% year-on-year for September. This data could also impact volatility across UK equities and also sterling currency crosses. Now let's take a look at sterling dollar. Sterling dollar in daily time frame appears to be capped by this falling 200 period moving average at 1.3240, 1.3275. These two levels appear to be a significant upside resistance at the moment. Any confirmed pullbacks from that level could potentially target initial downside support at 1.31, which is nice and round number, and also the cluster of these previous lows. Confirmed loss of that support level could open up the way for a deeper retracement towards 1.3023, followed by 1.2940. Alternatively, only a confirmed breakout above this current upside resistance at 1.3275 and end of day close above that level could potentially open up the way for an additional spike higher and retest of additional resistances towards 1.3370, 1.34 levels. Now let's move on back to the economic calendar. On Wednesday at 10 o'clock a.m, Eurozone CPI data is due. Current market forecasts are pointing to 1% figure from previously published 0.9% year-on-year for September. This data release could impact volatility in European equities and also euro currency crosses. Moving on, and this is probably the most important event of the week, on Wednesday at 19 hours, 7 p.m. UK time, we will receive US Federal Reserve FOMC minutes. And this data is always closely watched by many market participants and also analysts for any indication of voting patterns in relation to the most recent rate hike. This data release could impact volatility across US equities and also US dollar currency crosses. Now, that would bring us quite nicely to euro dollar. So, euro dollar appears to be under pressure at the moment. The current price action in end of day time frame is trading below 50 and also 200 period moving average. The initial upside resistance is at 1.1611. Only a confirmed breakout above that level and end of day close higher could open up the way for the retest of additional upside resistances towards 1.17, 1.1720. Breakouts above that level could potentially target additional resistance at 1.18, which is signified by the cluster of these previous highs here. If this current bearishness continues and the price stays below 1.1611, any further downside moves are initially supported by 1.15 level, which is signified by this rising support trend line and also the cluster of these previous lows. Only a confirmed loss of 1.15 area would open up the way for additional downside support retests towards 1.1440, possibly even 1.14. Let's move on to the economic calendar again. On Thursday at 1:30 Australian, this is 1:30 in the morning, Australian unemployment data is scheduled for release. Current market expectations are pointing to unchanged figure of 5.3% and 15,000 new jobs created for the month of September. This data could increase volatility in Australian equities and also Australian dollar currency crosses. And finally, for the week, on Friday at 3 a.m., 3 o'clock in the morning, UK time, Chinese GDP data for Q3 is scheduled for release. Quarterly growth is forecasted to drop to 1.6% from previously published 1.8%, and year-on-year figure is forecasted to come in at 6.6% from previously published 6.7%. This data could impact volatility across Asian equity indices, and also Chinese yuan currency crosses. Now let's go back and check dollar yen. Dollar yen appears to be uptrending at the moment, although we saw the current pullback due to the risk play in relation to the current equity indices pullback in US and Europe and across the globe in general. This signifies Japanese yen strength. The current price action is coming to a very important support level, cluster of the previous highs, and also this rising support trend line here. It's retesting 112, 111, 80 support zone. The price action appears to be bullish above that area from the end of day point of view, potentially targeting additional upside resistances towards 112.60, 113, possibly even 113 spot 40 levels. Alternatively, only a confirmed loss and the daily close below 111.80 would negate this current bullishness and the indication of the uptrend, which is signified by these higher lows and higher highs, potentially opening up the way for a deeper corrective move for dollar yen, therefore additional Japanese yen strength towards psychologically important 111 level, which was tested in the past over and over again, and it's very close to this 200-day moving average as well. Hopefully you found this informative. Thank you for watching, thank you for listening, stay safe, happy trading, and I'll talk to you soon. Bye for now.